to the Growth Engine Fundamentals video series. And in this episode, we're going to be speaking all about finance. Now, if you think about finance, it's in every aspect of your business, and without it, your business doesn't run. See it very much like the blood that runs through the veins. I'm often asked, what role does the management team play, and what role does the finance play, and a whole host of other questions. And ultimately, here's a great little way and a little sort of analogy that I like to think about it. Whilst the management team is the heartbeat of the business, finance is the blood that runs through the veins. And in this sort of video series, we're going to be speaking in each stage about the growth engine fundamentals, just to set the stage exactly what we mean, and ultimately that really falls back into two things that are very closely related, which are team alignment and making sure that right from the top, the business adopts the inbound methodology throughout the entire business model, not just the marketing area. And we'll then move into the overview of Growth Engine Finance, and we're going to be touching on raising capital, employing capital, managing capital, and distributing capital. And the term capital is finance or money employed, and we'll talk about that. So that could equally say raising finance, employing finance, managing finance, and distributing finance. But for this video series, we're going to be calling it capital. So without further ado, let's move forward. And I said we'd start by sort of setting what I call the fundamentals. And when you're talking about growth engines, and especially around the inbound methodology, we use the inbound flywheel, which is broken up into three specific areas of attract, engage, and delight. And it puts the client at the center of everything that you do. So if you're going to become an inbound business, then the client has to be at the center of everything you do. And don't fall into the trap that thinking that the attract phase is just related to marketing, and the engage phase is where your sales team take over, and then the delight phase is where your customer service team manage and look after them, clients once they've become customers and purchased. That's not true. The attract, engage, and delight phase is at every single point. So that applies in marketing, it applies in sales, it applies in customer service. So when we talk about growth engine fundamentals, we're going to be making references to the flywheel and ensuring that the client's at the center of everything that we do. Now, it doesn't really matter what type of business that you are. They're really outside of what I call corporate governance and the law and the legislation. So outside of that, which I've left out of this presentation here, that there is only 5 segments or areas of a business. And that doesn't matter if you're online e-commerce, you're an elongated long sale, complicated sales process, you're in B2B, B2C, H to H, doesn't really matter. The 5 really are applicable, and whatever you do within your business is really going to fall into one of these 5 buckets. So let's just take a recap of these. The 5 buckets or 5 areas are finance, operations, people, marketing, and sales. So, you might be sat there thinking, well, where does my manufacturing team or my customer service team fit? Or, my customer service team who are maybe on refunds, or, the ones who are out there doing trade shows and, and things like that. So I'll cover that on the next slide. But I just really wanted to recap. Growth engine fundamentals put the client at the center of everything that you do. And, even when they're just becoming prospects before they're even clients, that attract, engage, delight is applicable throughout the marketing, the sales, the customer service, and every single touch point that you have. So moving this next slide forward, you can see here at the bottom, finance, operations, and people really span out into what we call inbound client services. The marketing is inbound marketing, and the sales is inbound sales. And I just really want to break down the point that I touched on earlier. If you think about it, the finance is what funds and fuels the business. The people is what, make it move, the actual execution of it. And that will sort of spread, people will spread into finance, like your purchase ledger clerks, your finance directors. People spread into marketing, your marketeers, and obviously salespeople, business development reps, sales managers, field representation, whatever you have type of titles there. But people always drop into operations. And the way I see operations is everything from the products that you manufacture, the distribution channels that you get your goods to market, whether that's your transport division, your courier division, your customer service team, your research and development team. So that's really where I bundle operations in. And ultimately, if you think about it from a inbound marketing point of view, that's bringing prospects who eventually become customers through inbound sales. And then inbound client services is really the fulfillment or the production or delivering what you've sold. So again, it's just getting familiar with that terminology, right out of the gate. And ultimately, if you think about it from that point of view, if it's not marketing to bring people to the business and nurture it and educate them through the process, or it's not sales that is actually, engaging and helping people to buy, then ultimately it's going to fall into fulfillment that we class as inbound client services. So let's get, a little bit of more of a highline overview on growth engine fundamentals of finance. And moving forward, the second stage really is if we have capital or finance in the business, how do we best employ that? How do we get the best use out of it? How do we make sure that once we've got it, we employ it for the best possible ways? So in this one, we're going to talk through some obvious points and some highline areas again. And we're going to start with return on investment. And when we look at return on investment, we're really talking about, we're putting money into a business, and wherever that's come from, as we covered in the raising capital section, is irrelevant at this stage. But if we're putting money in, there may be some cash to burn, so the business burns cash and loses money until it sort of breaks even and moves forward. But ultimately, we're doing this because we want a return on our investment. And you will see abbreviations such as ROI, R for return, O for on, and I for investment, of course. But really, the way I like to look at it is it's capital employed because we're looking to acquire profit. We're looking for the acquisition of profit. And that can be translated to ROS or ROCE, return on capital invested. Why would you go and put, again, whether it's £1 or £1 million or 10 million or 50 million into a business and not expect to at least get your money back plus a satisfactory return? Now, when you're employing capital to get that return on investment, it can be done in a significant, dilution of ways. The four I've got here, which is in the overviews, but it's just got to get you to think that you've got cash in the bank or you've raised some capital. Try and put it into one of these boxes, because ultimately, putting a split and a spread on where you invest the capital, your business is very much like a flower bed. Each area needs some type of sunshine and water to make it grow and flourish and bloom to get the ROI. And one area that I see not necessarily overlooked, but skimmed and not enough time put into is research and development. It's rare that a company outside of an Uber or a Facebook or an Airbnb or anything like that, it's rare that you have such a dominance on your market that you have very little competition, or your product is that blue ocean, or your services are that blue ocean that you can afford to sit back. So research and development, looking at the existing marketplace, looking at competition, looking at customer feedback, looking at why people didn't buy, there's a good chance that if you're not looking at competition, your customers are, because your competition are quoting them, or at least trying to, ultimately secure the business. So what I would say is having a good research and development focus and employing some of that capital to say, hey, could we make our business better? Could we make this product better? Could we make this product and move it from a red, highly competitive, lower margin business into a blue ocean where there's either zero or very little competition, where margins could be higher? And when you go through research and development sort of projects, often new ideas come out, new markets appear, and new products and services materialize, and whether they're hybrid of your existing ones or something totally different. Again, you could really sort of start to develop and bring new products that differentiate your business. So what I would say is employ some capital into a constant research and development. Don't sit back and let the competition and the snapping heel go overtake. Infrastructure, of course, that's an obvious one. You're going to need buildings, you're going to need plant, machinery, computer equipment, training rooms and projectors, trade show stands. You're going to need a customer service department, phone systems, all those type of things, and anything that helps you facilitate the orders. Remember when we talked earlier about we referenced the operational fault moments. Well, that infrastructure, what keeps the lights on, that's infrastructure. So you're going to need to make sure you're going to be constantly updating your infrastructure. That can link nicely into research and development to make sure you're staying ahead of the game. Employing capital into project management, taking new ideas before they're ready to go to market. So when the research and development's been done, building, manufacturing, importing, exporting, hiring new areas, moving into new areas, managing those projects to make sure that they are saleable, they're regulatory, if you're an ISO 9000 related type of business or some other type of regulation, if you're in the aviation business, you're in the tech business, you're in the finance business like we are, where we're the FCA, all that type of stuff. You might need to have project capital in there to keep that going. Too many ideas stay on the whiteboard or on somebody's desktop, and they have the infrastructure to deliver on it. But the gap between research and development and infrastructure really is that project management to get that to market, and then get it ready to go to market. And then go to market, which is sales and marketing. Let's be realistic. You've got the best product out there or service. You have an infrastructure ready to facilitate and deliver to market. It's well been, financed and project managed, and you need to get it out there. So you definitely need a budget for capital or employing capital for your marketing team. And dependent on your business, that might just be an e-commerce store, like a Shopify store or something like that. It might be you have a team of 500 people in the field, as sales representatives. You may have a marketing team that's covering TV, radio, trade show, online, inbound, outbound, pay-per-click, so all those type of things. So you think about it. You've got a pot of money, you've got a business there. Some of you, that pot of money wants, moving into, making sure that your business is staying ahead of the market with R&D, research and development, reinvesting and maintaining infrastructure so you can compete, project manage that to certainly ensure that it's ready to, at the water's edge, to dive in, and then you go to market capital there to get your marketing and your sales. So again, if there's any questions you've got about employing capital in your business for the most effective use and what percentages, it's too broad the market to say, hey, you should be putting 20% into R&D or at least 30% into go-to-market. Depends on what you cost to acquire a customer, what your client lifetime value is, what your cost of borrowing is, how fast the sale happens, what your operating infrastructure, what does it cost you each day as a break even to keep the lights on. Every business is different, but if you want to share that with me, again, as I say, you can leave a comment on the blog below. You can send us a message on Twitter using the hashtag Growth Engine. Connect with me on LinkedIn, and if you want to share some more details, we'll be able to give you a better indication of what type of percentages that we'll be looking at based on the questions that I will ask you.